All right, just a quick update video on Ethereum. I'm going to go over a trade setup that I think is really solid risk reward. So we've got this ascending triangle that we've been tracking for months. It's a massive pattern. If you're into like the measured moves, which I'm not into the measured moves, but how some people do, the measured moves on ascending triangles is taking the height of the ascending triangle and then applying it to the breakout, which would target 4,600 ETH. So I'm not going to get too carried away there with that kind of targeting, but I do think that this is a bullish pattern. I do think that there's an opportunity, a good risk, high asymmetric risk reward opportunity to bid around this level at around 1780 or so. We'll call it 1784. So let me break down why that is. So first of all, you just have your general trend there, trend line there, which is I understand is a little bit messy. You're not always going to draw the same trend line. You could draw it a million different ways and just get somewhere in this region that's worthwhile bidding. So we'll narrow it down a little bit further. On top of that, you do have the potential, I guess, for a little bit of inverse head and shoulders. I'm not a big inverse head and shoulders guy, but let's just say that plays out. Everyone in hindsight will say, "Oh, it's such an obvious inverse head and shoulders." Regardless, that level to bid for the right shoulder would be roughly 1781 if we just look at this horizontal support here. Again, not a super strong case built yet for bidding this level, just off of the inverse head and shoulders and the trend line. However, we apply our margin pressure levels and we see, hey, where can 2x long leverage buyers, right? 2x long leverage buyers start bidding again while maintaining a liquidation point below the bear market low, or what I believe to be the bear market low. I don't think you're going to see sub $1,000 Ethereum anytime soon. If you think you are, then I don't know. Good luck. Maybe I'm wrong. We'll cross that bridge when we get there, right? If we start rotating to the bottom of these ranges, but I just don't foresee that being the case. So as soon as price hits 1763 in this case, you can start buying on 2x long leverage while maintaining a liquidation point below the bear market low. So that increases the incentives for buyers, for leveraged buyers to come in and push the price back up, right? And we've seen this level hold multiple times, in the very near past. All right, so those are our long levels. Let's isolate for where shorts are going to want to be not entering the market or no longer entering the market. And we kind of get our 4x, let me delete this, our 4x to 5x short band. It oftentimes acts as a zone of resistance, but you also have it overlapping at around 1784, right, with kind of your backstop around 1713. But you'll no longer be able to short on 5x leverage once price drops below 1784 while maintaining a liquidation point above this swing high, right? So the incentive shifts. So you have a ton of incentive shifts in the market here. So I believe that bidding around 1784 is an ideal scenario. And I didn't even check the risk reward levels on this move. We'll check that now. Yeah, it's giving you pretty decent. So this is your quarters, right, from the range high to range low, and you're getting some support at around 1850 where we've recently bounced. So you've got plenty of support in this zone. I'm not terribly worried about a larger move downwards for the market. I mean, ultimately from our local high, right, from our local high, we're down 13%. Our local high was like 2150. So this is a pretty normal, healthy pullback. Yes, we did come up and make a lower high, but this may have just been a deviation, and we're just holding this as resistance, which is normal for our ascending triangle pattern. So the trade setup very simply is to bid around 1784, 1785, keeping a nice tight stop loss right outside of that ascending triangle pattern. And then, as I've mentioned before, we can run it back up all the way to around 2700 pretty quickly with this large impulse move that we need to fill in. As if this video was helpful, and that's going to give you a 9 to 1 risk reward, very high risk reward trade here for a swing trade. Guys, if you enjoyed this video, please do like and subscribe. Follow if you're on Twitter. If you want access to these indicators, go over to Sistine.ai. You can grab the indicators bundle. You can also get access to them if you sign up for the Research Hub. Research Hub is a subscription where we just identify asymmetric risk reward opportunities in the crypto market and present them to our clients. So this is what we've been able to present so far this year. We've had a really solid year. We expect that to continue. We recently had a pretty solid win with Genie Bot doing a 4x from 2 million market cap to 8 million. So that was a little bit of a lower cap play. We also crushed it with OXBT Mint. Oni Force doing a 3x and a ton of NFT plays if you're into NFTs, but also some airdrops as well as some rotational trades like Stack. So if you're patient, there's a strong chance, at least historically, there's no guarantees here, but there's a strong chance that this pays for itself. And our goal is to just have it pay for itself through simply the airdrop guides, right? These are step-by-step instructions on how to do all of these different airdrops, which hopefully would pay off for your subscription. We've also got some TradingView chart templates. Like I said, you get the indicators, you got some one-pagers and some research reports where we're farming some different opportunities. Guys, also there will be a link below if anyone wants to trade on leverage and you're not in the US. I have a Bybit link. If you are in the US, I have a BTCC link for you to use. It's a little more US friendly. Thanks for tuning in. We'll catch you next time. Peace.